Right. Welcome everyone to our Kodati campus. For those of us who are joining virtually, good morning, good afternoon, good evening. We will begin the press conference for Wipro's third quarter earnings. My name is Nisha Chandrasekharan. I'm from the external communications team and I will be your moderator for today. Joining me on stage is our Chief Financial Officer, Aparna Iyer, our Chief Executive Officer and Managing Director, Srini Palya, and our Chief Human Resources Officer, Saurabh Koval. We will begin with opening remarks from our CEO, followed by the financial review from our CFO. Post that, we'll open the floor for your questions. With that, let me hand over to our CEO and MD, Srini Palya.
Thank you, Nisha. Hello, everyone. Thank you for joining us today, and we are glad to have you here. Let me start wishing you all a happy new year. 2024 was marked by macroeconomic challenges. If you look at 2025, we are more hopeful and resilient. Our clients are cautiously optimistic, and we see discretionary spending slowly coming back. While cost optimization continues to remain, we also see significant opportunities in AI spending. And here at Wipro, we are committed to driving innovation for our clients by leveraging the transformative power of AI. Let me now turn to the financial highlights of the quarter. All the growth numbers I share will be in constant currency. Our IT services revenue for quarter three was $2.63 billion, reflecting a sequential growth of 0.1% and a degrowth of 0.7% on a year-on-year basis. This takes us slightly above the upper end of our guidance. We ended the quarter with a TCV of $3.5 billion in bookings, and our operating margins came in at 17.5%, an expansion of 0.7% quarter on quarter and 1.5% year on year. This is a 12-quarter high, and I really want to take this opportunity to thank our delivery and the entire Wipro leadership and the teams for driving execution rigor. Thank you. Capco business continued to see improved demand. Order book grew by 9% year on year, and revenue grew 11% year on year. And in our strategic market unit performance, we saw a steady growth in demand across Americas, while Europe and APMEA remained soft for us. Americas 1 grew at 3.9% sequentially and 3.7% on a year-on-year basis. Growth was primarily led by health and technology and communications sectors. If you look at Americas 2, they grew 0.6% sequentially, while it grew 1.2% on a year-on-year basis, led by BFSI sector. Europe degrew by 2.7% sequentially and 4.6% on a year-on-year basis. APMEA degrew 2.1% sequentially and 8% on a year-on-year basis. Now moving on, 3 of our 5 industry sectors recorded year-on-year growth, reflecting steady progress across key areas. Health maintained its momentum, growing 6.7% sequentially and 4.5% year-on-year. While BFSI degrew by 1.9% quarter-on-quarter, the overall sector grew 3.4% year-on-year. Consumer degrew by 0.9% quarter-on-quarter and grew 0.4% year-on-year. Energy, manufacturing, and resources grew 0.4% quarter-on-quarter and declined 8.7% year-on-year. Finally, technology and communications degrew 0.6% quarter on quarter and 5.3% year on year. I would now like to share some updates on our strategic priorities, which we called out. One, in quarter three, we closed 17 large deals with a total value of 1 billion across markets and sectors. I want to give you two examples in this context. One, we won a vendor consolidation deal with a leading American retail and distribution company. As a strategic partner, we will transform their merchandising, sales, and supply chain functions. In fact, our AI led approach across engineering, digital, infrastructure, and application services was crucial in helping us win this deal. My second example is a leading airline in the Middle East that has partnered with us for end to end technology modernization. As part of a long term contract, we will design and implement a customized cloud based solution to improve operational agility and resource utilization. Again, using AI powered industry solutions, we will enhance employee productivity and customer experience for them. Two, we continue to focus on our large accounts in our core markets and priority sectors. In quarter three, we achieved a sequential growth of 7.3% in our top account. Top 5 and top 10 accounts grew 3.7 and 1.8% respectively. We remain committed to investing and scaling our large accounts, demonstrating client centricity by driving greater value, increasing our wallet share, and of course, expanding into new lines of business for the client. I want to give you one example to illustrate this. A global technology company has selected Wipro this quarter to create and scale a cutting edge silicon platform for its mixed reality products. We will work with the client to develop a silicon chip to deliver high performance at low power consumption, which is the need of the industry today. We will integrate advanced features, AI, sensor fusion, and stunning graphics to enhance user experience. In fact, this is one of Wipro's largest core silicon engineering wins. Three, we have made good progress in our consulting led, AI powered industry and cross industry solutions. We had several successes across our industry solutions. To name a few, Pair in a Box, Wealth AI, and our software defined vehicle. We also secured multiple cross industry wins with our next gen managed services and our Cyber Shield offering. We will continue to invest in AI education. 50,000 of our employees now hold advanced AI certification. In fact, beyond skilling, we are investing in AI tools and platforms across our software development cycle and our internal processes too. In fact, at Wipro now, we are early adopters of agentic AI, which can deliver impactful results for our clients. This technology goes beyond traditional productivity assistance we've been talking about. While many applications are still experimental, we see use cases emerging in areas like customer service and supply chain, to name a few. Now, we called out building talent at scale. is a key strategic priority for us. We remain focused in building a globally diverse team with a high performance culture. While we are promoting strong internal talent, we are also bringing in top external talent. We are investing significantly in leadership development. In FY25 alone, the Wipro Leadership Institute would have trained over 600 leaders through a combination of in-house leadership sessions and also programs curated with leading global institutes. Finally, I again want to recognize the dedication of our employees during the holiday season in delivering business critical programs successfully for our clients. Now, a note on guidance before I wrap up. For the next quarter, we are guiding for a sequential growth of -1% to +1% in constant currency terms. With that, let me turn it over to Aparna for a detailed overview of our financials. Thank you. Aparna, over to you.
Good evening, everybody, and wish you all a terrific new year. Let me cover the financial highlights for the quarter in 4 key points. One, as a result of the strong in quarter execution, we delivered above the top end of our revenue guidance, growing 0.1% quarter on quarter in constant currency terms. Two, our operating margins are at a 12-quarter high of 17.5%. This translates to an expansion of 0.7% quarter on quarter and 1.5% year on year. Let me also add that this was accomplished after investing in our people, absorbing 2 additional months of salary increase. You would note that we had rolled out our salary increases effective 1st September. As we move into Q4, we are confident of holding the operating margins in a narrow band. 3. Our EPS and net income grew 24% year on year and 5% sequentially. This was led by the EBIT growth, better returns on our treasury, and a stable ETR of around 24%. 4. I'm pleased to share that the Board of Directors have approved increasing the payout percentage from 45 to 50% to a range of 70% or above of the net income cumulatively on a block of 3 years, effective FY26. Along with this, the Board of Directors have also declared an interim dividend of rupees 6 per share, which is a significant increase in terms of the quantum of dividend payout. Finally, in terms of the guidance, to reiterate what was shared by Srini, we expect our revenues from the IT services business to be in the range of $2.602 billion to $2.655 billion. This translates to a sequential guidance of -1% to +1% in constant currency terms. With that, we are happy to take questions. Over to you, Nisha.
Thank you, Aparna. We start the Q&A session now. Please raise your hand and wait for the mic to be passed to you. And please make sure to introduce your name and publication before you ask your question. Just this time, we have a few of our outstation journalists who have joined on Teams as well. So we'll try to accommodate as many of their questions as we can. Yeah, you can get started. Oh, you go ahead, Rishabh.
Hi, this is
Okay.
Sai Ishwar from Reuters News.
Sorry.
Sai Ishwar
Sai
from
Ishwar
Reuters.
from Reuters News. First question, Shrini, you had briefly said about 2025, but I just wanted
Speak
to.
a little bit. Yeah.
You had briefly spoken about 2025, but I just wanted, fundamentally, do you expect any change in your biggest market, US, because there's a new, regime coming there? And also, one question I wanted to ask was about the large deals. So it's down 35% QOQ. So is it a one-off blip, or is it uh, something else there? And one question to you, Saurabh, is that what is the campus hiring target for next year, as all your peers have increased? Thank you.
Yeah. So, as far as the large deals are concerned, there is always a volatility, that comes in. If you look at our overall TCV bookings, they've been quite strong. We are seeing momentum in the smaller and medium-sized deals. The pipeline for the large deals remains strong, and we remain optimistic as we look into the next quarter, which is Q4. In terms of the environment for the next year, it's a little early to talk about it. Like Srini said, we feel more optimistic. There are parts of the business that are doing better. Certainly, Americas, both Americas 1 and Americas 2, and Capco, where we are seeing momentum. All of them have grown year-on-year basis. Three sectors have grown on a year-on-year basis. So that does signal that things are improving. As far as the new regime is concerned, again, we believe it will be business friendly, and hoping that the momentum picks up.
So maybe let me add some color to that.
Yeah.
If you look at in the context of our pipeline, Americas 1 and Americas 2, right? I think the momentum continues. We have good pipeline as far as those two markets are concerned. And if you look at Europe concerned, while you hear about the countries, what they're going through, but what's coming out of that is the customers now they are looking at cost optimization and efficiency. I think that's the pipeline that we are building in Europe. Having said that, we are also seeing a demand coming back on discretionary spend, especially in some sectors specific to BFSI, which is reflecting what Aparna said in terms of Capco. So net, a strong pipeline that we have. I think our focus will be to execute quarter 4 and year beyond.
The last question. Let me start by sharing some good news. As of end of Q3, we have first on all our campus hires. As you know, we had some backlog. We have closed on all backlog, and there is no pending offers on pass. So we have, as we had committed, we have honored all our pending offers. Going forward, as we had called out earlier, we would continue to onboard between 2,500 to 3,000 freshers every quarter. There could be quarter changes, but between 10 and 12,000 freshers would be onboarded every quarter, every fiscal. So that's the plan as we move forward.
Hi, everybody. Happy New Year, first of all.
Can you bring it closer to your?
Yeah, can you hear me now?
Yes.
Yeah, thank you. Happy New Year, first of all. Congratulations on a good set of numbers.
I didn't get your name. I'm sorry.
Sorry,
Your
Rishabh
name?
from Money Control.
Rishabh.
Yeah. So, on your large deals and TCV, it's been moderate. What do you see? What do you hear from clients, and what exactly are you hearing from them? Apart from that, did Rupee?
Okay, Rishabh, just keep the mic a little forward. Yeah.
Is it better now?
Yeah, wonderful.
Thank you. So, Aparna, for you, did rupee depreciation did it affect margins, and if yes, then how much? And on the customer size, you have highlighted earlier that you would like to reduce the tail end of the customer size. So we see that the tail end is decreasing, but then even the upper $100 million size and all others have been decreasing. If we look at Q4 from Q4 FY24, where are the deal wins exactly going, in which bracket? And
Should I take the?
No, I'll take the first part.
Okay. Yeah.
Srini, two more questions to you.
Rishabh, you're the hiker, right?
Yes, I am the hiker.
So take it one step at a time. Go ahead, Rishabh.
Okay, so on the leadership exit part, we saw one more senior leadership exit in this quarter as well. So has it stabilized as of now, and what do you see going forward? And on SLMs,
On
on SLMs, small language models, what is the update? And are you building, micro SLMs or LLMs? Thank you.
sure. So I'll take few questions and then maybe leadership you want to answer. Okay. So let's see. If you look at, you wanted to understand what we are seeing and hearing from the clients. So as you know, that January is the time when most of our clients, especially in the Americas 1 and Americas 2, the budgets starts getting frozen for the year ahead, right? So the initial, if you ask me, insights that we are getting is number one, there's going to be a good amount of spend on Gen AI because they want to use Gen AI to transform their operations infrastructure and also use Gen AI in the context of the software development life cycle as a process. So that's one I definitely see as as an opportunity for us. Second, in the context of discretionary spend that I talked about, we are seeing an uptick in terms of the smaller to mid-sized deals, right? That Aparna talked about. I think that will continue, which could be across AI, data, and cloud, because some of the clients want to completely move into cloud. Some of them are struggling with the data because enterprises, you don't get the right data. Your Gen AI is no good, right? Garbage in, garbage out. So that kind of investments that we are seeing. Third, in certain industries, there's a geopolitical aspect of it. So, for example, supply chain, right? Creating supply chain redundancies and adding on to new supply chains and so on and so forth. So, we are seeing those aspects of it, especially at the from a back office perspective, and we're also seeing a lot of clients now moving into, for example, from a technology refresh, which is from SAP, to SAP HANA. A lot of our clients, especially in the banking and financial services and healthcare, are looking at modernization because if you have to add Gen AI into the technology, you've got to modernize your core, right? And that then you become more effective. So in that context, that's why I said I see 2025 going to be resilient. We see the pipeline still robust across our industries. I talked about APMEA, one of the airlines that we actually won a deal which is very transformational, right? And we, the whole idea here is not only do you take it to cloud, but how do you improve the experience for their clients, and then you got to get your data and AI together as an end-to-end aspect. I also took an example of vendor consolidation. We see that to continue because client wants to optimize their cost of run and operate so that they can invest in change and transform. So this is, I told you a lot of things, Rishabh, but that's how the opportunities are actually panning out. Now, coming to your point specifically on SLMs, see what we have done is we have built, a Lab 45 AI platform where any of our clients wants to, implement any LLMs or SLMs. That's a platform to play. As an organization, I don't think we want to build LLMs or SLMs to that extent because we want to leverage what is there. We've got partners through which we're going to do that. However, we are building a lot of accelerators. We call it as Vega, which is Wipro Accelerator Program, which is going to help our clients while they're going through this, LLMs and SLMs to accelerate the whole process because we can bring the toolkit and they can actually use out of the box, do their development program. So that's a journey that we are taking. And the last part I talked about is agentic AI, right? Agentic AI can disrupt how the processes work, how the visibility works, how the contact centers will operate. So it's a very interesting time, next 3 to 6 months, as because so far AI was more on the personal productivity, but now we are moving away from that. We are moving beyond that, and agentic AI can be a revolutionary if you get it right. And I'm very optimistic about that aspect.
Can we take the next question from Anika?
No,
Well,
so
there's,
once again,
one
I think Rishabh had asked
Yeah.
several
Yes.
questions. So let me take the questions on margins and client size. As far as margins, operating margins are concerned, Rishabh, you note that the improvement has come after absorbing 2 months of salary increase. So significant part of the margin improvement has come as a result of the operational improvement that we've driven both in our core business and in the consulting businesses of Capco and Rising. So these are so that's something that we're taking heart on. This is a consistent improvement that we've delivered over the last 4 quarters. To your point on whether the rupee depreciation aided in the margins, you should also note that we also had a loss in the crosses, right? That's why our reported revenue growth is lower than the constant currency. And to that extent, while the rupee depreciation added, it was also partially offset by the crosses. And net, there was a positive impact, which is also reflected in the margins. We're not quantifying that, but that's the
Sure.
math you can do based on our average rate realizations.
Sure. My question on the deal bracket sizes.
On the client
Yeah, on the
on the client metrics, I'd like you to note while your point on the number of clients that you're seeing, yes, it's a result of a seasonally weak quarter of furlough. It's also a reflection of the weak discretionary environment that also meant our revenues over the last 4 quarters. You'd appreciate these numbers are reported on a trailing 12-month basis. And for the last 4 quarters, we've seen a weak discretionary environment that's also impacting the number of clients that is out there. And then we've also lost on the crosses in terms of the forex I spoke to you. So the dollar strength has impacted the revenues that come from GBP and euro. Outside of that, I would also like you to note that our top client, top 5, and top 10 have grown year on year on constant currency terms. And in fact, 7 out of the 10 clients have grown on a year on year basis. So we are making inroads in terms of mining our top clients, and we are very optimistic about it.
Thank you, Rudy.
Leadership exits. So I want to share that,
Yes, I'm sorry, we're still answering Rishabh's questions.
we asked up 8-9 questions, so we are very diligent in answering all. So I think we have made all the changes which was there. Srini has taken on 3 quarters back, and it's BAU now. If any changes, large organization, people will come, go kind of stuff. Key is that we have a good leadership bench strength. So there is no challenge in terms of any changes happen. We are geared up for that. But any large scale changes have all happened.
And Rishabh, just to add, I said it in my opening remarks as well. We will continue to invest in leadership development within Wipro. Like I said, 600 employees have been trained through Wipro Leadership Institute. Having said that, we will also go to the market and get leaders because it's a combination of both, right? So we will continue on that journey, Rishabh.
Shika, you can go.
Hi, this is Anika Chatterjee from Business Standard. So my question is, attrition is up and headcount continues to go down. So, is there an impact of AI in this entire situation?
Anika, Saurabh wants to answer.
So 2 or 3 things. One is what you are seeing is a trailing 12 months attrition as a metric, and that is seen as a high number. But our net new resignations are coming down. So I can very clearly see that given that we have a 3 months of notice period for a large part of our population in India, we will see a reduction in attrition coming down. So there is no challenge on that, and we are well covered. We have been the ones who went ahead of time to do an MSI. We did it in December of 2023 and we did it in September of 2024. So promotions are happening, salary increases are happening, people are getting bigger roles, rotations are happening. So there is no challenge on that front as of now. And the second part is on overall headcount. It's a marginal thing, more driven from a quarterly issue because the last 2-3 weeks of December, as you know, is a slowdown. You will see as we keep on onboarding more NGS, headcount will also not be a challenge.
Veena, I'll just come to you because Shivani has asked a question and she's part of Business Standard, so we'll just take that.
Sure.
Do you see any momentum in discretionary spends to improve? Could you share how you see Europe moving from here on? And if there are any changes in H-1B visa, how is Wipro preparing to brace it?
You said Shivani from
Shivani Shinde from Business Standard.
Okay. Okay. So the question was first on Europe, right?
Yes.
Like I said, Europe as a continent, as economy, I think we see what's happening in Germany, what's happening in France and UK, both in the context of political situation as also in terms of the economic situation. But having said that, like I called out, that we see opportunities for cost optimization and efficiency improvement. I think the clients who have not done that before are now thinking of doing that. So that's the kind of a trend that we are seeing that's reflecting in our pipelines. Now, coming back to the overall demand situation, I would say if I look at our pipeline right now, like I said, the discretionary spend continues to build up. And again, but it's in certain industry segments, especially like BFSI, which is also reflecting in our Capco growth that we are Aparna talked about. In terms of specifically, I answered through Rishabh, and Rishabh asked, right? There are multiple areas. Gen AI could be one of them, and technology modernization are the areas where we see uptick in our pipeline.
On H1B, I just want to call out two things. One, as a company, we have been investing and hiring a number of people, a large number of people who are locals in the US. And today, a significant portion of our employee base in the US is local. And second is we have a good inventory of H1B, which we can move people whenever required. So if demand goes up, as demand goes up, supply side will not be a constraint for us.
Veena, you'd like to go next?
Yeah. Veena from the Times of India. You mentioned that the headcount is not has not decreased by a lot, but it's about 1,000 odd people. Uh, so, if you could just explain that, is it only largely because of the furloughs? But do furloughs really is it considered in looking at the net reduction in headcount? I just want a clarification on that. But if otherwise, what is the cause for the headcount reduction? And going forward with generative AI, will the net additions really get slower? Will it not grow at the same pace? Also, you spoke about H1B. I wanted to ask you about nearshoring. So, would more people typically be added in nearshore centers than relying on US on the on-site premises? And also, just wanted to understand on the furlough bit. Was it how was the furlough? Was it as anticipated? Was it or was it a lot more than what you expected and what it was last year? Um, yeah, and I would just want to go back some 3 years back. There was this moonlighting debate and all. Companies just called employees to office. So, with that, have you seen a sort of a? I mean, clients also I've heard that are doing their checks and balances over there since that began. So, is there anything new to share on the moonlighting bit? Has it come down? Are you looking at a lot of such cases, and how are you as Wipro tackling it? And you were one of the earliest ones to talk about moonlighting.
Yeah. So number of questions again for you. So let me start on the headcount. Headcount for Q3 is at about 1,000 plus down. And for the full year also, it's on the same range for the first three quarters. And I just believe that it's driven by demand and productivity. And as we look into the coming quarter, this will get ironed out. So that is more a seasonal thing because the number of freshers we onboarded in Q3 purposefully was a smaller number than what we will onboard in Q4. So that's one. On I think on nearshoring and offshoring, as you spoke about in H1B, uh, COVID has very clearly given the option in terms of people, clients being comfortable with a lot of offshoring. So I think that is not a challenge. And we as an organization have a fully geared up in terms of our nearshore centers and offshore centers. So I think that again is well orchestrated and in design, so that should not be a challenge. On return to office and moonlighting, one of the reasons which we had called out 3 years back, Yuswal, was that people were not coming to work and hence were moonlighting. I'm very happy to share, that very uniquely, Wipro, while giving the flexibility to employees and not putting any penal measures, have asked people to be there for 3 days a week. And as we speak, 80% of our employees are in office 3 days a week with no penal measures. This is all about leadership role modeling, all about expecting them to come, and we are seeing the trend, and we are hopeful that this number will only go up as we move forward. As that happens, issues of moonlighting and all that are obviously coming. We are seeing attraction there.
In terms of the furlough impact in the quarter, it was lower than what we had anticipated at the start of the quarter, slightly lower, and in line with what we had hoped to optimize even as we started the quarter. That's why we guide in a range, and we ended slightly above the top end of the range. And it also reflects that the furloughs that we had anticipated versus what is finally played out it's better, but it's broadly in some sense, is nothing material to call out there.
Haripriya, you can hold it. You
Closer.
Yeah.
Hi, this is Haripriya from NDTV Profit. Srini, the consulting commentary that you gave, could you quantify that a little
Can
bit?
you just, Haripriya, can you just keep the mic closer?
Okay, am I audible now, sir?
Yes,
Yes.
absolutely.
Sir, could you quantify the commentary on the consulting that you gave? Because since the
Commentary on
last couple of
consulting.
quarters, you were giving some numbers. So, what could you tell about that? And when you say that we are winning wallet share in the market when it comes to the large deals, how is it that you are looking at it? As in, it's still a competitive market. So, would you say that you're vying on the wallet share of others, and then that's how you're winning in the market? And a little bit more on agentic AI. If you say that this has the potential beyond personal use cases, how is it in terms of translation into the numbers, right? Because Gen AI, quite a convenient route of it's baked into everything, can't speak about it. So is that something, this also something on the same lines? Because so far it just sounds like a new tech bro dude slang. So give us more color on that. And in terms of the budgets for the next calendar year, the improvement in the sentiment that you're seeing, is this translating into the budgets when you speak to the clients? And do you expect CY25 to be better? And on the margins, ma'am, what are the puts and takes that you'll have in next quarter? And in the year forward, what's the kind of aspirational level that you're trying to reach? Also, sir, the hiring plans that you mentioned, is there any change in the method of hiring? We see now the other, your peers have like a national qualified test and stuff. So how are you looking at hiring, given the improvement in the tech and the advancements as well? So for the fresher talent, is there any change in requirement that you're
Hi, Haripriya. You asked me so many questions, only one to Aparna and one to Saurabh. So this is going to take a lot of time now. But these are excellent questions. First is consulting you talked about, right? There are two ways I look at consulting, and I can give the context of Capco, right? If you look at Capco, consistently last 3 quarters we've been talking about Capco both in terms of bookings and growth, and that's a good indicator because that's a discretionary spend. And if you want to lead with consulting for a downstream revenue, I think that's a good spot for Wipro to play. And we can be dominant in that BFSI sector in that particular context. So I'm very happy with the progress Capco has made, and I see a lot of energy and enthusiasm within the Capco team, right? As far as consulting is concerned. The second part of consulting I want to talk about is, we want to be, like I said, consulting-led, AI-powered industry solutions and cross-industry solutions. And I did talk about some of the wins that we have had this quarter across, whether it's healthcare, which is more to do with Medicaid, and ACA care, or if you look at wealth AI, which is more in terms of wealth management, how you can help the analysts working with their clients, right? So to me, that's other part of consulting. And if you don't understand the client's business, you don't understand the domain, then the technology implementation will not be effective or efficient, and or you may not be at the table for a discussion, right? So that's my color on consulting. Second question is, you talked about wallet share. Sorry. Good question. That's for Aparna.
Yes.
Go
Do you want me to answer that?
go ahead.
So, I think, most companies have stopped reporting the service line view of their revenues. So we don't share a number. And since we are not putting it out in the data sheet, it will not be correct for us to share it just in the press release. So, you can take a broad sense based on what Srini has shared on Capco.
Okay. Can I move forward, Haripriya? Wallet share. See, when we talk about a wallet share, one of the thing, the way I look at it is, as an organization, right? We are working with a client in certain budget pools or the swim lanes, right? How do you get to the next swim lane, right? For that, you got to build the capabilities within that account. You got to understand the client business priorities, the challenges that they do have, right? So the example that I gave is that we are working with a client on the operation side and the application side, but now we have started engaging them on the silicon side, which is a growth area. So that's what I mean by trying to increase the wallet share. The second part is you can also increase your wallet share through consolidation of vendors, which is another example that I gave you, right? That's another way of increasing the wallet share. So what's important is you got to stay committed with the client. You got to stay invested with the client. You got to be consulting led. Every client is looking for AI, right? You got to bring in the AI power to the conversation. And that's what I mean by, increasing the wallet share. In terms of agentic AI, Haripriya, you didn't hear last quarter, right? That was not there. It just came up. Now you're asking to quantify that. It's going to be difficult. The focus right now is how can we build agentic AI in various operations, be it customer experience or in the process area like supply chain, right? You got to understand the challenges the enterprises are facing today to deploy agentic AI in the true sense. Data, right? If you don't have the end-to-end view of data, let's say take the context of supply chain, right? You can deploy agentic AI, but it cannot be smart. And then you could still continue to have human intervention. So the idea here for us is, and then most of our customer applications are sitting in the cloud. So how do you bring AI, data, and cloud and disrupt a particular process using an agentic AI? And we are working on multiple process areas around that. So it's too early to quantify, but I'm very optimistic that there will be a positive impact going forward. Now, coming to the last question on budgets, I did talk about it, right? Shivani asked the same question. Rishabh also asked the same question. Now you're asking me the same question. I will repeat that. Number one, in January, we get to know better understanding of the client budgeting process. We are having those conversations with them. But having said that, I'm fairly optimistic there will be a significant investment in GenAI and GenAI related technology modernization for our clients. And like I said, that will have a ripple effect on modernizing the code, right? Upgrading their current systems so that they can make it more effective end to end. And of course, you have to got to get the data up. So those aspects also will bid it. So I'm like I said, I see 2025 cautiously optimistic. This is what the clients are telling us. I see there will be a lot more resilience built in. And if you look at from a geopolitical state perspective or a political situation, I think US is going to, like Aparna said, it's going to have a new administration, right? Like I said, in Europe, they are struggling with the economy, so the cost takeout becomes important. So we got to, we are having those conversations.
So on margins, in terms of puts and take as we move into Q4, like I shared, we feel confident about holding the operating margins in a narrow band. There will be the puts and takes in terms of the levers that we have will continue to be those that are really at an all-time high, like sustaining the utilization, sustaining the offshoring that we have managed to accomplish. And then there will be those that still have some room, which is around fixed price productivity, higher fresher index, and rotation. We will continue to optimize on our overheads. These remain as levers as we look forward. But the biggest lever will be the improved revenue environment, right? And I think when that happens, we will also see some more tailwind to the margins. One of the things that we are very, very keen, even as we drive operational improvement, is that we will have to invest for growth. So, in some sense, the margins in the medium term will be a combination of this. We don't guide for margins. And on M&A,
So, Haripriya, M&A is a strategic aspect of Wipro. M&A will continue to look for opportunities, and wherever it can strengthen our five strategic priorities, we will go inorganic where required. So to me, that's an ongoing conversations that we have. So it is strategic.
so investments, when I mean, it could also, it is certainly one is inorganic, but it's also organic investments that we will need to make. Srini spoke of AI powered industry and cross industry solutions. That's something that we are betting big on. And those are places where we will invest.
Last is on hiring. A very significant shift in our approach to hiring. Uh, Sanjeev has led that entire change. One is we have moved from hire and train to train and hire. And what we basically mean is that we have gone and created center of excellence across 25 universities across in India and outside, where we have specific curriculum from the fifth semester, work with them so that we can have students cater to our needs, what we need. And they're specific to a particular skill set. Could be in cyber somewhere, could be on data somewhere, could be on cloud somewhere. So that's one part which we are doing. And second is consistency in terms of making sure, as we had called out about going to campuses and hiring regularly, which was a bit of a stop start in the previous 2 years. And lastly, use of technology. We have in different ways, but two examples. We started looking at L1 interviews, the first level of interviews being done, through AI and seeing how we can look at that part. And obviously today still there's a lot of manual intervention, but we are exploring these options there. Not getting into how we are looking at receiving the CVs and profiles and through that process. So fairly significant shift in the way we have approached on hiring.
Veena, you can go next.
Hi.
Just to keep in mind that time limit, if you can limit your questions to two, just a request.
I'll try to. Hi. Just if you
Sorry, I
could just,
didn't get any.
sorry,
Beena.
Beena from the Economic Times.
Beena.
If you could just get some, idea on the key factors that led to the profit growth and the margins growth, especially because I think we've heard about currency tailwinds, but at the same time, was that the only factor? What really drove the rise in profit and margins? And if you could also give us, what were the wage hikes, if you could quantify them, and what was the impact of those in on your margins, wage hike as well as the currency headwinds, tailwinds. And you mentioned, Aparna, about the narrow band margin that you want to maintain. Could you give us the band at least, if not, exact margins where you see it landing in the next few quarters? And on the hiring target, you had given a target of 10 to 12,000. Is that on track? And how much has the hiring been so far? And next year, fiscal year, the target that you mentioned is similar. What would it be? Would it be campus, off campus? If you could just give some color on that. Another one is on the just an extension of the Gen AI impacting hiring. I just want a macro sense. How do you see hiring, the correlation between hiring and revenue growth going forward over the medium to long term? Do you see that Gen AI and AI will see a large impact in the way you hire? And lastly, just to get a sense, Srini, you're almost about to complete a year, 3 quarters. What do you think, you've worked upon, and what do you think have been the challenges that still remain and still to go in this year ahead?
Thanks, Bina. I appreciate you have one question for me.
So, Bina, we don't guide for margins. And when I say narrow band, we can't quantify it. We had earlier said that we want to be at a target aspirational band of 17 to 17.5%. We are happy that we've been able to deliver that through consistent improvement over the last 4 quarters. right? We will continue our endeavor on operational improvements. As to how we achieve the 17.5% for quarter three, like I said, the puts and takes, right? First, we had to absorb 2 additional months of wage increase. Second, it's a seasonally weak quarter. We're not quantifying some of this because we're not calling it out, so I'm not able to give you out a number. But I can tell you the significant levers where the salary increases. It was a seasonally weak quarter in terms of furlough, and we made up almost entirely through the operational, and the entire bulk of the expansion is also because of the operational improvement that we've been consistently driving both in our core IT and in consulting businesses, right? uh, that's all I have to say. And as far as the future is concerned, we will continue to make these improvements. The levers remain the traditional levers, and we will continue to optimize on our overheads. We will sustain our utilization. We will work more on our fixed price productivity. Those remain very, very critical levers, but we'll also have to invest for growth. So 17.5%, we're good at this level for now, and we will continue to work and wait for the revenue environment to also improve.
On campus, first of all, we would be a shade less than 10,000 for this current fiscal. We've done around nearly around approximately 7,000 and get exact number. And we're looking at between 2.5 to 3,000 in the next quarter. So we'll be around 9.5, 10,000. And for the next fiscal, we are clear that we would continue with between 2.5 to 3,000. So 10 to 12,000 is what we want to be. Again, we don't want to go overboard and make offers and we can't absorb. So we have learned the lesson. We want to go more cautious but more consistent. That's our approach. The question on AI and the long-term impact on hiring numbers and all that, I personally believe that there'll be two parts. One is how can we look at better productivity. Aparna spoke about operational improvement, fixed price projects, kind of stuff. There is a lot of productivity happening. So that will be one driver of low hiring. Lower attrition would be a hiring. Better utilization could be another area. Or also the impact of technology. But I personally believe the impact of AI per se would take some time to evolve as they move forward. So it is an evolving process, and we'll see how that goes in the long term.
Okay.
1 year.
It's 3 quarters, 2 months less than 1 year, Meena. I was just trying to recollect since he said 1 year. But okay, I'll take 1 year. Time moves very fast. We called out 5 strategic priorities. We said we want to be AI powered Wipro. And we said we want to demonstrate execution rigor with speed. Right? Finally, I will say that we are just staying focused on those aspects of it. As an organization, we will continue to get more grittier, day in and day out, week in and week out, month in and month out, year on year. And we'll stay focused on our clients. We will make sure we develop and build the talent for future skill sets, and we'll go in that path. As simple as that.
We have a very limited time. Sonal, before we come to you, I just have one question from Sparsh from Financial Express. He has asked if you can highlight the key reasons behind the lower revenue guidance.
We guide based on the visibility that we have at the start of every quarter. Srini spoke about how we have a good momentum in our Americas business, in the Capco business. We continue to see some of that play out even into Q4. But there is also softness in Europe and APMEA, which is also baked into this guidance. Those are the puts and takes. And we also have lower working days because of the holiday calendar that we've announced. So these are some of the reasons why the guidance is what it is. And yeah.
Sonal, would you like to go next?
Yes. Hello, everyone. Congratulations on the result. This is Sonal Chaudhary from Deccan Herald. Quick question.
many 2022 batch graduates who received the offer letters are saying that they are getting rejection letters. My question is that what's the ratio of rejection to acceptance here? Yeah, I'll move ahead after that.
So what we have done, is that given that there was a time gap from the time we had made offers to people, the time when we were looking at onboarding, we did two things. One is we helped them continue to get skilled. So we gave them opportunities where they could go in online and do skilling. And second is we assessed them. And we, basis the assessment, we took it forward because we didn't want to get people who had lost touch. That was the thing which has happened. I won't have the exact number in terms of what, but obviously there was a filter stage for people who were onboarded with the right assessment, both on technical and communication skills, and then onboarded.
Just a clarification, this assessment happened after the offer letter?
Yeah, because there was a gap. Yeah. So there was a gap
Okay.
of so long. I was offered in 2022, as you said,
Yeah.
and then I'm getting an opportunity. So 2 years have gone by. The world has changed. So we very clearly wanted to reassess people and then take it forward.
Just one last thing. Although you've answered on H1B, I would like to know if there's a certain percentage that you could give us on the local dependence there.
So it's nearly around 80% approximately.
Sanjana, if you would like
Yes.
to.
Yes. Hi. Sanjana from the Hindu Business Line. Just two questions. So the energies and utilities vertical remains soft and has seen like a double-digit degrowth on a year-on-year basis. Has this been a headwind for overall growth? And Srini, you had mentioned last quarter that you were seeing opportunities around cost optimization and vendor consolidation in the sector. How is this panning out? And Aparna, last quarter, you had mentioned that you were improving utilization over the last few quarters, but it has dipped yet again. So, any comments on that?
Yeah. So I'll go first and then change. So two comments. One is on the utilization because it typically tends to be lower in Q3 because it's because of the furloughs. That's how we define the metric. So every Q3 you will see a dip. It should come back because the core utilization continues to remain high, adjusted for these furloughs. Um, in terms of the EMR vertical that you spoke of, the first good sign is it is growing, at least on a year-on-year basis, a sequential basis, that's in some sense a start. For a year-on-year basis, it remained a headwind as far as our growth is concerned. But we've had one dot in the line, which is positive. The pipeline looks good. And we remain very, very optimistic about our capabilities in this space, especially in energy. And the pipeline is good, and we remain optimistic on that. We've had the first sequential growth there. You want to talk about vendor consolidation? Yeah, thanks.
Thanks. Padmini, do you want to go next? Yeah.
Hi, hi, I'm Padmini from the Financial Express. So, one of your peers had called out saying that they're seeing average time of deals reduce. Is that something even you're seeing?
Yeah, we spoke about how our bookings have, they've sequentially declined marginally, but if you look at our large deals, it's come down. It automatically means that the momentum in our small and medium deals was better. So we are also seeing that, but it's one quarter. We would wait for this to play out over 2 or 3 quarters before making something more deterministic. But we do feel optimistic about discretionary spends, especially in a few quarters, in a few sectors like BFSI. It's very reflected in our Capco growth, which was about 11% year on year. Bookings also grew 9% year on year. So those are things that are up, but we'll just wait for a more deterministic trend before we.
Okay, a follow up on that is Gen AI's fast evolution also one of the reasons why clients are hesitant to approach to large deals or mega deals?
See, if you look at the any deals, whether it's a part of the software development life cycle or whether it's part of operations or it's part of application support and maintenance or infrastructure maintenance or the cloud, by default GenAI is getting into it. Okay, and GenAI is getting into both during the transition phase and also during the steady state. So the way I see it is, the implication of GenAI is to improve the whole, the experience, both, during the transition and transformation, both customer and employee experience. I'm not relating that, GenAI is impacting the large deals. I don't think so, because large deals will, GenAI will be part and parcel of large deals. And if you look at some of the deals that I called out, whatever we won this quarter, they were all AI powered, right? So that's a trend I think will continue.
Yeah, completely. Yeah, we can take one.
Want to take? Oh,
Yeah, please.
Narayan, sir, you can pass the mic. Please. We are run out of time, so this will have to be the last question.
Hi, I'm Narayankar from United News of India. This is a larger perspective question regarding the industry context. How does Wipro's this performance compare to its competitors, such as Tech Mahindra, which reported a 21% drop in profit?
No,
And what industry wide trends are influencing the IT sectors this quarter?
So first and foremost, we do not comment about the competition. I think the whole conversation is about Wipro, and, what our strategic priorities are, and how we're going to drive execution. I think I'll stay focused on that, and we share a lot of information and data based on how the quarter three trends are and how we see the future for us going forward in the context of opportunities and demand environment. I like to stick with that.
Thank you, everyone. We will have to conclude our Q3 FY25 earnings press conference. For all your queries, please reach out to the media relations team. We'll be happy to help you.